Hey everyone, my name is Daniel and welcome back to the Finance Channel. I hope all of you are having a great day out there. As always, here today, we need to talk because markets across the board, whether it be the stock market, the crypto market, or even international markets, are down in a major way. And this is all pertaining to Evergrande, which in this video, I want to talk to you all about exactly what's going on here with this whole kind of, micro crash slash correction that we're currently in the midst of, whether or not this might continue moving forward, and the potential implications this has for specifically the crypto markets, the stock market, and the stocks that we usually cover here on this channel. So if you've been enjoying this video and potentially end up finding some value in it, please consider subscribing. And with that out of the way here, let's get into the video. So first and foremost, really important to understand, if you don't know what's going on, at least at this point as of yet, Evergrande is essentially a Chinese real estate company. They develop different properties, and they're pretty much one of the biggest real estate companies out of China, and there's a lot of talk about them potentially going bankrupt under a load of debt. They have a lot of bonds out there which some people own, and it may lead to a ripple kind of effect that may impact US stocks or potentially other companies within China and lead to almost like a second Lehman Brothers. Some people make that comparison with what we saw back here in 2008. Now, whether or not this happens remains to be seen. We don't have enough clarity, at least at this point, to say, all right, Evergrande's going bankrupt 100%. But what we can take a look at is whether or not this is actually going to have real potential implications for the US stock market, which when you look at CNBC right here, and it is showing futures, but we were down significantly. US stocks, Dow Jones down almost 2%, S&P 500 down 2%, NASDAQ down over 2%, Russell 2000 down right around 2.5%. You look at European stocks, also down. You look at Asian stocks, a little bit mixed. They've already had a bit of negativity over the past couple of weeks here, but either way, a lot of negativity and a lot of FUD around this whole situation. So my job here, at least on YouTube, is to kind of simmer this down to the potential implications and the basics, to take a look at not what people are saying about Evergrande, but instead the potential implications that Evergrande has on the crypto market, on the stock market, and on the different, assets that we hold and, that I hold, at least on this channel. So first and foremost, let's talk about stocks, because this is really important to understand. If you do not own any stocks that are directly exposed to the Chinese market, you are most likely than not going to have any form of implication to your company's revenues or profits. Let me make this very clear. If you own a company like, let's say, Zillow, a real estate company within the US, you're probably not going to feel implications through that company's revenues or profits. But you look at potentially a company like maybe Wynn Resorts or Las Vegas Sands, two companies involved in the Chinese space, maybe Alibaba. These are companies that are more exposed to China, and in doing so may see more implications. Now, despite this kind of concept that I'm talking about right now, we did see a major move downward across the board. Now, in my opinion, this is mainly just funds deleveraging. We did see a lot of positivity in the markets over the past couple of weeks and months, and of course, ever since March of 2020, it's been incredible. But you look at this move right here, I don't think it really has anything to do with these companies' fundamentals, and instead is the market just being the market. Taking a look at this massive kind of, potential, black swan, let's say, and really over leveraging this fear to a proportion that doesn't really make too much sense. As I mentioned previously, this doesn't really impact company profits. Now, the first thing that my mind went to is, all right, Evergrande issues bonds. If they go bankrupt, the value of those bonds pretty much dissipates. And you look at a stable coin, like let's say Tether, they own a pretty decent chunk of bonds within their actual pool of money. Look at stable coins. Some of them hold 100% of, the value of the stable coin, because again, should be pegged rather to the US dollar. They hold it mainly within US cash, but when you look at Tether, they're actually kind of different because they actually own rather a lot of bonds. And the thought originally was that, hey, if Tether owns Evergrande bonds, and if Evergrande goes bankrupt, you may see a potential collapse of the Tether stablecoin, which is worth upwards of $100 billion, which heavily is exposed to the crypto market and could potentially lead to rather implications in the crypto sector as a whole. But a lot of positivity here because we did get clarification saying that stablecoin Tether says it holds no Evergrande commercial paper. This is very, very good news here. And it again showcases that Evergrande doesn't have major implications for crypto like we potentially originally thought. Now, keep in mind, if Tether did own Evergrande bonds and if Evergrande went public, or rather bankrupt, that would have had major negative implications. But at least at this point here, when we talk about the crypto market, there aren't too many negative implications. So when I look at this whole situation here with what's going on in the broader indexes, the broader markets, a lot of FUD that isn't really backed by anything fundamental that may fundamentally be game changing for these companies in any way, shape, or form. I personally believe it's just volatility spiking, some of these potential funds deleveraging, selling out. Again, been a lot of froth in the market lately, no doubt, a bit of a cool off, and it might just be the market taking this as a reason to take an opportunity to cool off here over the next couple of days, weeks, potentially even months, as again, you don't really want to see a straight line upwards in the stock market because generally what you see immediately after that is a straight line downward. So nothing fundamentally game changing, just a bit of FUD out there. And I want to make that, that very clear for you guys. Now, next year, I want to talk about this from the perspective of individual stocks that I personally own. And I'm going to kind of hit off a few of these. First and foremost, Voyager Digital, obviously a company that we talk about on this channel a lot, down pretty significantly here today. I'm going to just show you guys exactly what's going on here with price action. Now it's sitting at $11 per share. Now I will make a video at some point in the future kind of reassessing my thesis on Voyager, giving some more clarity on that. But you look at this company, sure, cryptocurrencies were down, and that's probably the reason Voyager was down, but Evergrande doesn't impact Voyager in any way, shape, or form. Currently, they're only exposed to the United States market outside of New York. So you look at this whole Evergrande situation, is that going to stop people from trading and holding cryptocurrencies within the United States? No, not whatsoever. So this price action here with Voyager, although it may be partially cryptocurrencies falling, it may be partially, just with the overall market falling because of Evergrande, it doesn't impact the company. That's important to understand. And my bull thesis on Voyager has not changed, at least, up until this point here. Now let's look at TTCF here, the Tattooed Chef, another company that I'm personally invested in, trading just under 20 bucks, fell right around 2.5% today. Good to see it not fall when the NASDAQ is down over 2%, mainly kind of tracking the market, at least at this point, shows maturity from investors pertaining to this company. But either way, you look at the Tattooed Chef, only exposed to the United States market, a little bit in the UK, not too much, and potentially other areas of Europe and Canada over the next couple of years here, but they're a food company exposed to North America. They are not involved with Asia in any way, shape, or form. Any dip that we see because of this massive situation here with Evergrande, even if they do collapse, does not impact Tattooed Chef and does not impact them as a business. Important to understand. Now I can list off a few others like Smile Direct Club, like, potentially High Tide or Shift or other companies out there, which, I have bought over the past little while here, but all of these companies, the thing that remains true is that they aren't impacted by Evergrande. Now, the one that is, however, is Alibaba. Now, this is a company that I put a little bit of money into, not too much. I want to say it was just under $200, which is where I first bought shares in Alibaba, and obviously it's down substantially since then. Now, obviously, we can't control the market. This whole Evergrande situation may have potential implications for Alibaba, in my opinion. Not huge implications, because when you look at a company like, let's say, Amazon, if the United States goes into a recession, Amazon's business isn't going to suffer in any way, right? Because people still need to get their goods, need to get their things, need to get their food sent to their door. When you look at Alibaba, sure, you have the cloud side of their business, which will continue to prosper for years to come, but their actual core e-commerce business is very similar to where people are going to continue shopping on Alibaba and AliExpress for years to come. And that isn't going to change if this Evergrande situation may lead to a coming recession. So again, with Alibaba, a lot of fear here. I have a very, very small percentage of my portfolio, right around like 1 or 2% in Alibaba. I just want to expose myself a little bit. not too much. I'm fine with that. I'm hodling Alibaba, and we'll see what happens here in the near future. Either way, really important to understand, Evergrande does not impact US stocks on a fundamental level in a major way. And although this may continue from the sense of FUD and fear, this doesn't have an impact on a lot of these companies' revenues, profits, and actual core businesses. So that's kind of the message I wanted to send to all of you here today. Just add a bit of clarity on what's going on. I'm not worried whatsoever. Let me know what you think in the comment section down below, and I will see you all in the next one. Bye-bye.